Are you ready for the Q4 altcoin explosion? A massive $7.3 trillion is sitting on the sidelines, and it's about to flood into crypto as interest rates fall. This isn't just another prediction. We're seeing the early signs right now with small pumps across the market. But the real fireworks are expected to kick off in the fourth quarter. This video breaks down the exact sectors poised for the biggest gains, including AI, real-world assets, RWA, and gaming. We're not just talking theory, we're naming the specific large cap and high-risk coins that could lead the charge. With Bitcoin holding strong around $113,000, the stage is set for altcoins to steal the show. Find out which coins like Avalanche, Banter, and Chainlink are on the radar, and how to position your portfolio for what could be a life-changing altcoin season. Don't get left behind when this capital rotation begins. In the latest video from Altcoin Daily Channel, the discussion centers on which altcoins are set for a major run, with a particular focus on Solana versus Ethereum. The host notes that while Bitcoin is currently a strong buy, the real millionaire-making potential lies in specific altcoins. The video features Matt Hogan, the CIO of Bitwise, who manages $15 billion in assets. Hogan explains that the formula for big returns recently has been a mix of ETF inflows, corporate buying, and positive news. He applies this framework to Solana, suggesting it's perfectly positioned for a surge. He points to the high likelihood of Solana ETPs launching soon, a strong technical upgrade called Alpenlow, and growing interest in tokenization. Hogan's key argument is Solana's relatively small market cap compared to Bitcoin and Ethereum. He mentions it's about 1/25th the size of Bitcoin, meaning new investments will have a much larger impact on its price. He calls Solana the new Wall Street, arguing it's specifically designed for tokenizing traditional financial assets like stocks and bonds. This idea is supported by comments from BlackRock's Larry Fink and former SEC Chairman Paul Atkins, who both foresee a future where all financial assets move onto blockchains. The video also touches on Michael Saylor's bullish stance on Bitcoin, viewing it as digital gold and a primary asset for corporate treasuries. The video makes a compelling case for Solana, framing it as the go-to platform for the tokenization of real-world assets, a narrative strongly supported by financial heavyweights like BlackRock's Larry Fink. The core idea that Solana's smaller market cap gives it more explosive growth potential than Ethereum is a classic crypto investment thesis. As of today, Bitcoin's market cap is approximately $2.26 trillion. Ethereum's is around $503 billion, and Solana's is about $115 billion. This confirms Hogan's point in the video. Solana is significantly smaller, giving it a higher beta. The video's bullishness on a Solana ETP is timely. Recent developments show the SEC has approved new generic listing standards for crypto ETFs, which could streamline the process for assets like Solana. In fact, Grayscale's digital large cap fund, which includes SOL, was recently approved, marking a significant step towards broader institutional access. However, the SEC has also delayed decisions on other specific Solana ETF proposals, pushing deadlines to October, which introduces a note of caution. The video also mentions the Alpenlow upgrade, which seems to be an older name or a misremembering of the upcoming Firedancer upgrade. Firedancer is a major development expected in 2025 that promises to dramatically increase Solana's transaction speeds and reliability, addressing past network outage concerns. Meanwhile, Michael Saylor's strategy of continuous Bitcoin acquisition remains in full effect, with MicroStrategy recently adding another 850 Bitcoin to its holdings, bringing there. In the latest video from CryptoRover channel, the analysis shows Bitcoin is at a pivotal moment, testing a significant support level after being rejected from resistance. The price has successfully taken out liquidity from the lower side and is now seeing liquidity build up above the current price, pointing towards a potential move to the upside with a target of around $190,000. A key bullish scenario involves the formation of an inverse head and shoulders pattern, which would project a price target of about $137,000. However, if Bitcoin breaks below the current green box of support, the outlook would turn extremely bearish. The video draws parallels to previous bull market years like 2017 and 2021, where the fourth quarter, Q4, kicked off exponential runs. It suggested that a similar pattern to 2024 could be playing out, where a rate cut led to some market weakness before a strong Q4 pump. Furthermore, the analysis points out that gold is currently in a strong uptrend, and historically, Bitcoin tends to follow gold's lead. For Ethereum, the current price action is seen as a reaccumulation phase below its all-time high, suggesting a good opportunity may be forming. The video's technical analysis presents a classic bullish case based on historical patterns and liquidity dynamics, setting a very optimistic target of $137,000. As of late September 2025, the market is in a delicate position. Bitcoin is currently trading around the $113,000 mark, having experienced a significant dip earlier in the month, which saw prices fall from above $122,000. This recent volatility, dubbed Red September, wiped over $160 billion from the total crypto market cap and saw massive liquidations of leveraged positions. In the latest video from Crypto Tips channel, the host lays out a game plan for cashing out your crypto profits without getting hit by surprise fees and taxes. The main issue is that using regular exchanges like Coinbase can cost you up to 1.5% in fees and cause other problems like slippage on big trades. To get around this, the video suggests using peer-to-peer P2P platforms like Binance P2P to trade directly with others and skip withdrawal fees. For larger amounts in the six-figure range, over-the-counter OTC desks at major exchanges are recommended to get better rates and avoid impacting the market price. The video also touches on smart tax planning, like holding assets for over a year to get lower long-term capital gains tax rates. Some countries like Portugal and Germany are mentioned for their friendly crypto tax rules. Finally, using stablecoins like USDC for payouts or spending with a crypto debit card is presented as a flexible way to use your gains, though it's still a taxable event. The strategies discussed in the video offer a solid foundation for anyone thinking about how to take profits. P2P and OTC desks are timeless methods for optimizing exits. However, the landscape in 2025 is a bit more complex. With Bitcoin currently trading around $113,000 and Ethereum near $4,100, the stakes are higher than ever. The video's mention of Portugal as a tax haven needs a current-day asterisk. While still favorable, Portugal now taxes short-term crypto gains held less than a year at 28%. Long-term holdings of over a year remain exempt, making timing even more important. In the U.S., the regulatory environment is rapidly solidifying. The passage of the Genius Act in mid-2025 has established a federal framework for stablecoins, which adds a new layer of compliance for the USDC payout method mentioned. This increased regulatory clarity, along with other legislative efforts, shows that government oversight is becoming much more direct. While the methods for cashing out remain the same, the rules of the game have definitely changed. In the latest video from the Lark channel, the discussion centers on how a potential Republican landslide in the 2026 midterm elections could create a powerful political landscape for a Trump administration, similar to the sweeping reforms seen under FDR's New Deal. This unified control could lead to significant economic shifts. The video points to existing tax cuts and suggests more could follow, such as slashing corporate tax rates below 20% and expanding child credits, which would put more money into the hands of consumers and businesses. A major point is the idea of a U.S. sovereign wealth fund, which Trump has already set in motion with an executive order. This fund could potentially manage trillions of dollars. The speculation is that a portion of this massive fund, perhaps $2 trillion, could be invested into cryptocurrencies. This, combined with pro-crypto legislation like the Genius Act for stablecoins and a strategic Bitcoin reserve, could integrate digital assets into the core of America's financial strategy. Furthermore, the video suggests that a Trump-appointed Federal Reserve chief would likely lower interest rates and weaken the dollar to boost manufacturing, which could drive even more investment into assets like Bitcoin. The scenario presented paints an interesting picture of a politically driven crypto boom. However, it's a speculative outlook that hinges on a specific, and by no means certain, election outcome. Currently, the crypto market is navigating a complex environment. Bitcoin is trading around $113,000, and Ethereum is near $4,160, with the total crypto market capitalization sitting at approximately $3.9 trillion. The idea of a U.S. sovereign wealth fund injecting $2 trillion into crypto is captivating, but it faces the reality of a national debt exceeding $37 trillion. Funding such an initiative without significant budget surpluses would be a monumental challenge. In the latest video from the Cowen channel, the discussion centers on the S&P 500 and its historical patterns, particularly in post-election years. The stock market generally trends higher, climbing a wall of worry, but certain periods historically show weakness. The S&P 500 has rallied approximately 39% since its April low. The analysis correctly predicted weakness in the March-April timeframe and now points to another potentially weak period between late September and mid-October. Historically, a 5 to 6% drop during this time is common, which would align the index with its bull market support band, the 20-week SMA or 21-week EMA. Cowen's analysis is particularly timely as we are right in the middle of the late September to early October window he identifies as historically weak. As of late September 2025, the S&P 500 has been trading near all-time highs, closing around 6,693 on September 22nd before pulling back slightly. The market has indeed shown some hesitation, with minor losses recently attributed to profit-taking and uncertainty. The video's theory about the Russell 2000 is also relevant. The small-cap index did hit a new intraday high around 2,488 just days ago before seeing a slight pullback. In the latest video from Coin Bureau channel, the discussion centers on a major legal battle over President Trump's tariffs that has reached the Supreme Court. Federal courts have challenged the president's authority to impose tariffs by declaring a national emergency under the International Emergency Economic Powers Act, IEPA. This has put at least $159 billion in collected tariff revenue in limbo, with potential refunds estimated to be between $750 billion and $1 trillion if the court sides against the administration. The video does a great job of breaking down a complex constitutional and economic issue, but the situation's impact on markets is even broader when viewed through today's lens. The core of the debate is economic uncertainty and the power to influence trade, factors that ripple directly into the crypto space. Currently, Bitcoin is trading around $113,000, showing significant institutional interest. This interest often grows when stability in traditional markets is questioned. The Federal Reserve just cut interest rates to a range of 4.0% to 4.25% for the first time this year, responding to a slowing labor market even as inflation ticked up to 2.9% for the 12 months ending in August. This creates a tricky environment. The Fed is trying to support jobs while tariffs are pushing prices up. If the Supreme Court cancels the tariffs, we could see a massive injection of cash into corporations via refunds and a wave of market optimism. This risk-on move typically benefits assets like crypto. However, if the court upholds the tariffs, the resulting trade instability and potential for unchecked executive power could just as easily push investors toward decentralized assets like Bitcoin as a hedge against unpredictable government policy and potential currency debasement. Either way, this court case is more than a political headline. It's a major event that could stir up the very economic waters where crypto thrives. In the latest video from CryptosRus channel, the discussion centers on two main points: a market-wide crash triggered by comments from Fed Chair Jerome Powell and the standout performance of a crypto project named Aster. Powell stated that markets are fairly high-valued, which investors took as a sign that things are overheated. This led to an immediate downturn in both stocks and crypto, pulling Bitcoin down. The speaker notes the contradiction in Powell's statement, as the Fed has previously claimed its focus is on jobs and price stability, not market valuations. The market's sharp reaction to Jerome Powell's off-the-cuff remark about high valuations shows just how sensitive investors are to any guidance from the Fed right now. While the video mentions a Bitcoin price of $112,000, the reality is quite different, with Bitcoin currently trading around $113,261. This kind of volatility underscores the market's current uncertainty, which is also reflected in the bearish sentiment seen across many technical indicators. In the latest video from Crypto Banter channel, the host lays out a bullish case for the fourth quarter Q4, but with a major catch. This time around, not every token is going to rally. The market is no longer rewarding promises, it's rewarding proof of real usage and value. A key historical indicator for a strong Q4 is the performance of the market in the second half of September. If the last 2 weeks of September close in the green, there's an 88% chance Q4 will be bullish, with average gains of 135%. This is supported by a strong macro environment, including all-time highs in the S&P and gold, along with recent Fed rate cuts. The video's central theme of a flight to quality is a sentiment that's becoming more pronounced in the current market. As of late September 2025, Bitcoin is consolidating around the $113,000 mark after a volatile summer, and the market is indeed showing a clear preference for projects with strong fundamentals over speculative plays. The idea that not all ships will rise is critical. We're seeing this play out as institutional interest continues to grow, but in a more selective manner. For instance, recent regulatory clarity from a joint SEC and CFTC statement has paved the way for more spot crypto products, which will likely favor established assets. In the latest video from Crypto Casey, she provides a straightforward guide to setting up and using the Tangem hardware wallet. The process is shown to be quick, taking less than 90 seconds to create a new wallet by scanning one of the 3 provided cards with a smartphone. The tutorial covers creating backups with the other 2 cards and setting a secure access code. Casey then demonstrates how to add various cryptocurrencies like Bitcoin, Ethereum, and Solana to the wallet's dashboard. The video does a good job of showing how user-friendly hardware wallets are becoming, which is a big deal for getting more people to take control of their own crypto. The simplicity of the Tangem card is definitely appealing. Looking at the current market, the need for secure self-custody is as relevant as ever. Bitcoin is currently trading around $113,348, and Ethereum is near $4,168, so the stakes are significantly high for investors holding these assets. The crypto market has been turbulent, with a recent sell-off in September wiping out over $160 billion from the total market cap, pushing Bitcoin down from previous highs. This kind of volatility often makes people nervous about leaving their funds on exchanges. In the latest video from DataDash, host Paul Sampson lays out a fascinating theory about why Bitcoin came into existence. He questions if Bitcoin's appearance in 2009, right after the 2008 financial crisis, was just a coincidence. Paul connects this to an 18 to 20-year housing and economic cycle, suggesting we are heading for a major market crash between 2026 and 2029, which also happens to be the 100-year anniversary of the Great Depression. He proposes that the trigger for this next downturn won't be housing, but massive job losses from artificial intelligence, potentially affecting 300 million jobs. This event, he argues, would pave the way for universal basic income, UBI, distributed through central bank digital currencies, CBDCs. This is where Bitcoin's origin becomes critical. It introduced the blockchain technology necessary for a CBDC system to work. He also claims that while the public was encouraged to chase riskier altcoins, governments and large institutions were quietly accumulating Bitcoin using negative media to their advantage. The video presents a compelling, if conspiratorial, narrative that ties together economic cycles, technological disruption, and the rise of digital currencies. The 18 to 20-year cycle theory he references is a known concept in real estate economics, with some analysts suggesting the next major correction could indeed be around 2026 to 2027. However, others point out that major global events can disrupt this timing. In the latest video from CryptoWendy, the discussion centers on major regulatory moves in the United States that could be very positive for the crypto space. U.S. lawmakers are pushing the SEC to put into action an executive order from President Trump that would allow crypto investments within 401k retirement plans. This could potentially open up a massive $12.5 trillion market to digital assets. The video also mentions that the White House is working towards establishing a complete market structure for crypto by the end of 2025. Additionally, the current SEC chair, Atkins, is looking to introduce innovation exemptions by December. These exemptions would let crypto companies launch new products without being slowed down by heavy regulations, although they would still need to follow basic reporting rules. The importance of self-custody is also acknowledged. For context on the market, the video notes Bitcoin is trading over $100,000. The video paints a very optimistic picture of the regulatory future for crypto in the US, and while there is positive momentum, the reality is more complex. The push to include crypto in 401k plans is a significant development, with lawmakers urging the SEC to implement President Trump's executive order from August 2025. However, even with this directive, the process of changing federal rules is slow, and it could be years before major retirement plan providers like Fidelity or Vanguard widely offer direct crypto investments. In the latest video from The Modern Investor, the discussion centers on the massive accumulation of Ethereum by corporate entities, suggesting a future where very little Ether will be left on exchanges. Two companies are specifically mentioned: a new firm called The Ether Machine and SharpLink Gaming. The Ether Machine reportedly raised $654 million to acquire 150,000 ETH, bringing its total holdings to around 500,000 Ether. The host predicts this company could hold over 1 million ETH by December. Meanwhile, SharpLink Gaming, already a major corporate holder, purchased an additional 56,533 ETH at an average price of $4,400 per coin. This latest purchase increased their total reserves to 797,000 ETH, valued at approximately $3.7 billion. The video posits that with so many companies aiming to secure large percentages of the total Ether supply, a supply squeeze on exchanges is inevitable. The host also briefly touches on the news of the Gemini exchange receiving a MiCA license to operate across 30 European countries. The video's focus on a corporate-driven supply shock for Ethereum is a persistent narrative in the crypto space. The examples of the Ether Machine and SharpLink Gaming accumulating hundreds of thousands of ETH highlight a trend that data continues to support. Ethereum exchange reserves have indeed fallen to multi-year lows in 2025, with recent figures showing reserves dropping to around 15 to 16 million ETH. This indicates a strong trend of investors moving assets into long-term holdings or staking, reducing the immediately available supply for trading. In the latest video from Alex Becker channel, the main idea is that the crypto market is on the verge of a massive altcoin season, likely kicking off in Q4. He argues that the recent pumps are just a small preview of what's to come. A key driver for this will be the $7.3 trillion currently in money markets, which he expects to flood into riskier assets like crypto as interest rates fall. He then breaks down the most promising sectors and gives coin examples for different risk levels. For large caps, he mentions Avalanche, AVAX, Cardano, ADA, and Sway. In the AI sector, he points to Banter, TAO, as a leader, with AOS, Zignali, ZIG, and Destra, DSYNC, as other significant players. He also discusses real-world assets, RWA, highlighting Tharwa and Chainlink, and a new narrative in robotics featuring modular, mod. Finally, he touches on gaming, noting Super and Beam as strong contenders. Alex Becker's forecast for a Q4 altcoin rally driven by capital rotating out of money markets is a compelling narrative, and it aligns with broader market expectations as the Federal Reserve is anticipated to begin cutting interest rates. As of late September 2025, Bitcoin is hovering around the $113,000 mark after a recent dip, showing some resilience. Ethereum is trading near $4,200, also in a period of consolidation. The idea that trillions from low-yield environments will seek higher returns in crypto isn't new, but its timing is becoming more critical. In the latest video from Jebb channel, Jebb explains why he thinks a new Bitcoin rally is about to kick off. After a recent price drop of $3,000 to $5,000, he spots a potential inverse head and shoulders pattern on the 4-hour chart. He believes this technical formation is setting the stage for a significant upward move. If the pattern plays out, he's looking at a short-term target of $118,000 with a larger goal of $130,000 by the middle of next month. Jebb also touches on the bigger picture, noting that the growth in the M2 money supply and the historical relationship between gold and Bitcoin support a bullish case. He points out that gold rallies often happen before major Bitcoin moves. With gold currently very extended, he expects that money to flow into Bitcoin, potentially pushing prices toward $150,000 or even $200,000 in the final quarter of the year. Jebb's technical analysis from the video, focusing on an inverse head and shoulders pattern, is a classic bullish setup that traders often watch. However, his price targets of $118,000 and $130,000 need to be seen in the context of the current market, which has already experienced significant volatility. As of today, Bitcoin is trading around $113,000, struggling to hold its ground after a sharp market downturn wiped out over $160 billion in value this month. This red September event was driven by a stronger US dollar and regulatory concerns, leading to massive liquidations of leverage positions.